Good afternoon and welcome to our special session on tax exemptions offered to NRI investors. Welcome to Happy Investor. This is Sujata, and I shall take you through a brief session on how, as an NRI, there are certain provisions in the income tax laws where you can benefit from a lower level of taxation as compared to the normal circumstance. So, as an NRI, are you paying more tax on your investments? Well, here we are here today to help you understand tax advantage that you get as an NRI under sections 115C and 115S. So this is the relevant section, which is provisions under section 115C, which states this is an extract from the income tax website. This gives you the definition of who can avail of this benefit as an NRI. What are the circumstances and what are the regulations that you have to complete as an NRI, and which are the investments and tools that are eligible for this benefit. Then we have the section 115, which is a specific section which allows that capital gains on transfer of foreign exchange assets, how the tax outflow can be reduced, which I'll get into the details of this section as we go ahead. Why are we talking about this today? So as an NRI, you can reduce tax on certain investments as per section 115. And today we will explain what is the special tax rule, who can benefit from it, and how you can make the most of this without missing out any of the conditions that you have to fulfill. So this is a rule that's been in force from the year 1983, when this was introduced to attract NRI investments into the country. So NRIs can invest their foreign income from outside the country in India and pay much lower tax on this. And this benefit comes under the section 115C and 115F of the Income Tax Act. Now, what are the conditions that you have to fulfill? We shall look further. So what income gets this special treatment? This has to be, the source of this income has to be foreign income. So it has to be, the investment has to be done from an NRE or an FCNR account. No, not eligible when it is done through an NRO account or from Indian salary or from rental income generated in India. So the exemption is applicable only to specified assets that's listed within that section 115F and C. So NRIs can claim concessional tax on interest and dividends from investments made using NRE and FCNR funds and long-term capital gains from such investments. So what are the assets that qualify for this? Assets acquired using foreign currency or NRE funds, as stated earlier. What are these assets? Some of them they're listed or unlisted shares in the Indian public company, debentures and deposits with Indian public companies, and specified central government securities, which the government will release as and when they open. The usual tax law is that there is a flat 20% tax on interest income. So under section 115C, interest income will get taxed at 20%. This could be interest or dividends. This could be interest from bonds, corporate deposits, etc. And for a regular resident Indian, this is taxed at the highest income slab rate, which could be 30%. While for an NRI under this section, it will be taxed at flat 20%. But this is only for non-bank deposits, as NRE and FCNR bank deposits interests are anyways tax-free. So what's the tax advantage on long-term capital gains? Under section 112A, long-term capital gains are taxed at 12.5%. This is valid for a resident Indian as well as a non-resident Indian. But under the special provision of 115F, the long-term capital gains from the sale of some specified assets, which are taxed at 12.5%, can actually become tax-free if reinvested within 6 months. And once reinvested, these assets need to be held for a minimum of 3 years to be eligible for this tax exemption. If you do sell it before 3 years, then the LPC tax which you did pay because of the reinvestment, would become payable. So we are just stating the source from where this tax law can be accessed. So this is the income tax government page where you can read this. So how do you avail of this tax advantage on the long-term capital gains? If you sell and reinvest correctly, so you have to reinvest the full sale amount within 6 months. The new investment must be as a foreign exchange asset from the NRI. If you make a partial reinvestment, then you get only a partial exemption on the sales. Once reinvested, you need to hold the asset for 3 years. If you sell before 3, the exempted tax becomes payable. If all the rules are met, then you do not pay LPCG for that period. So this is as far as we are reading out the law for you. How does this really look in real life? How does it appear in the numbers? So we're sharing some simulated scenarios. So as a resident Indian, Mr. A invests 20 lakhs. And this 20 lakhs grows over a period of time to 40 lakhs. Mr. A redeems the entire amount of 40 lakhs and therefore realizes a long-term profit of 20 lakhs. Out of this, 1.25 lakh of profit will be exempt as per the rule of 112A, while balance 18.75 lakhs will be taxed at 12.5%. So that tax will have to be paid, and that would amount to about 2,43,750. On a second scenario, Mr. B, who is an NRI, invests using NRE funds. The same 20 lakhs in the same time grows to become 40 lakhs. He redeems the entire amount and has a similar profit of 20 lakhs, but reinvests that entire 40 lakhs and holds it for 3 years, so there is no tax. It further grows to become 60 lakhs in a different time period. And again, he redeems and reinvests this every 3 years. Reinvests and holds it for 3 years and doesn't pay any tax. So the 12.5% tax is still payable only on the final redemption for whatever is the profit on the reinvested value. How does this actually look in numbers? So we've simulated that same scenario here with actual numbers to show you what is the extent of tax that you actually save. So an investment of rupees 50 lakhs is simulated here for a period of 12 years, where we've assumed an annual growth rate of 12%. Now, this 12% annual growth rate has been based on the long-term average the market has been delivering. Of course, it does not guarantee future performance. This is just for a reference. So if you look at the first column, we see here that the investor has invested 50 lakhs. The value after 12 years directly, without any disturbance of redeeming or reinvestment, would work out to about 1 crore 95 lakhs. The profit that person would be calculated on the initial investment of 50 lakhs. And hence, profit would be about crore and 45 lakhs. At the final withdrawal, the investor still gets an exemption on 1,25,000. And therefore, the taxable profit would be a crore and 43 lakhs, 54,880. And on that, the tax payable of 12.5% would work out to approximately 18 lakhs. So if you look at the net value that the investor gets after having paid the tax, would be 1 crore and 76 lakhs, 85,000 is what he would receive after paying the tax on an initial investment of 50 lakhs. If you look at the next two columns, we've taken that same 50 lakhs and split it into two parts, one of a 10 lakh investment and the other for 40 lakh investment. The 10 lakh investment can be rotated every year with a 1.25 lakh profit that keeps getting reinvested every year. So the value after 12 years would be 38 lakhs, 95,000 times, approximately 39 lakhs. But the profit would be calculated on a value of 23 lakh 75,000 because we've rotated 1.25 lakh of profit over 11 years. So the gross profit would be 39 lakhs minus 23 lakh 75,000, which is about 15 lakhs. On the final redemption, you would still get a benefit of 1.25 lakhs. And therefore, the taxable profit would be approximately 14 lakhs, on which the investor would pay a tax of about 1 lakh and 75,000. And therefore, the net value post paying the tax would be 37 lakhs 21,500. On the 40 lakhs, the value after 12 years would be crore 55 lakhs 83,000. So therefore, the profit but the final profit would be calculated on a value of 1 crore 10 lakhs 92,000 because we have rotated the profit every 3 years. And every 3 years, when you rotate the redeem and reinvest, the profit goes back as a fresh investment. So the final redemption will always be calculated on the last investment. So if 1 crore 55 lakh 83,900 is what the investor gets after 12 years, and its profit is calculated at 1 crore 10 lakh 92,000, the gross profit would be approximately 45 lakhs. On this, there will be a final exemption of 1.25. And therefore, taxable profit would be approximately 43 lakhs 66,000. On this, tax payable would be 5 lakh 45,000. And therefore, the net value the investor would get post the exempted tax payments would be this 37 lakhs plus this 1 crore 50 lakhs, and a total value of 1 crore 87 lakhs 59,000 vis-a-vis 1 crore 76 lakh 85,000. So the difference there would be 10 lakhs 74,000, which the NRI has managed to save on the basis of using rule 112A as well as 115. So it would amount to about approximately a lakh a year in a period of 11 to 12 years. So this is what you can legally do based on the rules and fulfilling the conditions as per the rule. So I'm still an NRI. So what if I move funds from my NRO account to NRE account and then do the investment? Am I still eligible for the benefit? No. Just transferring funds using Form 15 CA or CB and moving funds from an NRO account to an NRE account and then making the investment does not help you to qualify for this. For this tax benefit, the funds should be originally foreign income and directly invested from the NRE and FCN. Okay. At some point in time, I might not be an NRI all my life. So what happens when I become a resident again? The good news is that you can continue this concessional tax rule for those assets that you invested while you were an NRI for one final redemption. So if you've done a last lock-in for 3 years, and in between that 3 years, you move from an NRI to an RI resident status, that 3-year benefit can still continue. But at that final redemption, it will be taxed as per the resident Indian. You have to file a written declaration with your ITR. But further reinvestments or new investments after return to a resident status do not qualify for this benefit. So what are we actually talking about over here? Because you get a continuous tax exemption over a period of 3-year cycles, it compounds your wealth better. So as long as you invest from the NRE or FCNR funds, you can compound this exemption of tax. You reinvest the full gains within 6 months of redemption and hold for 3 years and stay compliant as per NRI resident status, NRI status. You can avoid long-term capital gains for every 3 year cycle, which over a period of time gives you a higher post-tax. So how can you benefit from this? Why are we talking to you? So we're bringing this rule that exists out in the open, which not too many people are aware of. It's a legally available resource that you can benefit from. So please consult your CA, consult your tax consultant, and verify these rules as they would be applicable to you as per your NRI status based on your country of residence and your tax laws. Because each country of residence has a different tax laws that apply. You can check and then proceed. But why is Happy Investor talking to you? We are bringing out information out in the open, which is there and can be used. Apart from that, here's how we can help you. We can help you plan for your emergencies. We can give you a good guidance on having a robust health insurance, as well as sufficient term life insurance to secure the future of your dependents. In the process of your investments, we help you to allocate funds according to the timeline of your requirement. So we can help you allocate funds towards your short and long-term requirements and ensure they are done as per your capacity and your ability to take risks. We can also facilitate a monthly income support for your lifestyle at any stage in your life, and especially post-retirement. We also help you to manage your loan needs. We also assist in will writing services so that you can have comfort that all your investments, all your assets will easily pass on to your heirs with a smooth inheritance. We also take a unique investor first approach in our investment philosophy. So we understand your risk taking ability, we understand your capacity to take risks, and then suggest investments based on your requirements and timelines. We suggest mutual fund investments, which help you arrive at a more tax efficient investment process. We also create a diversified mutual fund portfolio, give you better returns, better risk adjustment, and better post tax and inflation adjusted returns. So why should you choose us? Well, we are a firm that's been in the business for the last 17 years, and we have 600 crores of assets under our management, which is coming from families that have trusted us over the last 17 years. We have 650 families registered with us. And as an organization, we have weathered the downs of 2008, global financial crisis, as well as the 2020 pandemic, and delivered customer delight. Cumulatively, over a team of 10 trained professionals, we have 82 years of experience, and all our team members are certified for the NISM examinations, which is mandated by the mutual fund industry. And we are one among only 2,700 certified financial planners in the country. And this means that you get the highest level of understanding of financial planning, and therefore your investments are done in keeping with that. Well, if you have any investment related queries or you would look for suggestions and guidelines, please reach out to us. If you are ready to start your wealth building journey, reach out to happyinvestor.in, mail us at info@happyinvestor.in, or reach out to us over a phone call or WhatsApp on 98861 98851. Thank you for watching, and we hope you can benefit from this. Do reach out to us. This is Sujata from Happy Investor. Thank you for watching.